Ayodeji Dawodu, Head of Research at Investment One, joins us now to give his highlights of the trading day and to shed some light on the investment options investors should be looking at in Nigeria. Ayodeji, thank you so much for being here today.
Thank you so much for joining us.
So you've listed 10 options, as it were, where you call them the 10 hottest options, as it were, right now that investors could put their money for good returns. And that's still on the backdrop of the fact that so many people are not investing. And for those who are investing, a good number of those people still do not know where to look for the best returns. Tell us more about that.
Yes, I mean, that's exactly why we decided to put together this report, is to increase the awareness of the various different investment opportunities that are available to investors, but particularly to investors of all portfolio sizes. So, I mean, the focus tends to be equities. Last year, we saw a lot of interest in treasury bills, which is, fairly expected given that yields were about 22%. So far this year, we've seen yields on treasury bills moderate slightly.
But they're down to around 13%.
Yes, I mean, it's still relatively attractive. One-year T-bill at about 15.5% is still relatively attractive, especially when you compare it to yields globally as well. But what you see this year is that the real return should continue to increase because we're expecting to see inflation moderate this year. Currently, inflation is about 14.33%, so you're actually still getting real returns when you're buying one-year treasury bills compared to your 10-year government bonds, for example, which are trading at about 13.5% levels. So we think treasury bills are still going to be fairly attractive. I mean, it's also good to bear in mind that it's risk-free. So 15% return on a risk-free instrument is still pretty attractive.
So last year we saw the equities market surge over 40%, and this year the performance has been a bit muted, I would say. But then, given the returns that the equities market recorded last year, do you think that they will have a similar performance this year? And is that why they're ranked a bit lower in your list?
Yes, so I mean, it's good to look at what drove the equities performance last year. It recorded, as you mentioned, 42% gain. But there was a significant catalyst we saw to that, the significant improvement in the FX markets following the improved liquidity on the back of higher oil production and oil prices as well. And that led CBN to establish the INE FX window, the Investors and Exporters FX window. That consequently led to increased participation from foreign investors in the equities market. Now, that led to the 42% increase in the market's performance. This year, we're not really seeing much of a catalyst to drive the equities market performance, so we're not expecting a repeat of that 42%.
So what kind of range will we see? Because I'm thinking, I mean, that was obviously a major game changer for the market, and we just saw that surge, of people, especially foreign portfolio investors, back into the market. This year, we're going into an election cycle. Yes. We're seeing, although declining yields at the treasury bills market, but still attractive. So I'm thinking, what is going to be that big catalyst this year?
I mean, we're looking at the equities market to return 15%, maybe 20% on the high side. Yes, on the year. There is a major catalyst we can see this year, the potential reinclusion of Nigeria in the JP Morgan bond index. Fair enough, it's bonds that will be going back into our index, but it could be a significant for foreign investor sentiments towards the country, which could really buoy the equities market's performance. So in the absence of that, maybe we do about 15%. If we see a possible re-inclusion, then maybe we could do 20% or 22% levels.
And how likely is it that Nigeria will be included in the JP Morgan index this year?
It's looking increasingly likely. I mean, we were retained in the MSCI index, and part of the reason why we were under revision in the MSCI index is the illiquidity in our FX market that made it difficult for foreign investors to repatriate funds. That's significantly improved now on the back of the establishment of the INE FX window. So we believe it's more of a case of when rather than if we are re-including the JP Morgan index.
I was looking at that list of 10, and on that list, there's apart from equities, there's sovereign bonds, state bonds too. I'm interested in state bonds. I mean, who are those who are invested in the state bonds? I
mean, state bonds are for those who are looking for a little bit of a higher return. I mean, there's still some element of risk-free in terms of the nature of your state bonds.
Because of the irrevocable standing order?
Exactly,
order. Okay.
Exactly. So it's still relatively attractive. Your federal government bonds, you still see some interest there despite the 13.5% levels in terms of returns, but there's still interest in those state bonds. Lagos State, for example, is still fairly attractive given the high internally generated revenues coming from the state.
I guess investors will be picky. I mean, it's not just every state that's put out a bond, so if it's a state like Lagos, I mean...
Yes, of course. You have to pick wisely. I mean, it's always good to consult a broker or investment analyst to guide your decision, especially when you don't have the expertise or the resources to do the kind of analysis that's required.
Well, thank you so much for being a part of the show today. Thank you so much for your time. That was Ayodeji Dawodu, the Head of Investment Research at Investment One.